Hi, everybody. This is Jerry Salai from the Society of Technical Analysts. I'm joined today with Trevor Neil, who's giving a talk at our Technicals to Trading Systems conference on the 18th of April, 2023 at 1 Moorgate Place in London. And it's also going to be hybrid. You can see him online as well if you can't make it to the conference in person. Hi, Trevor.
Hi, Jerry.
It's great seeing you, Trevor. So you're one of the big speakers at the event, along with Jason from Refinitiv. Is that correct?
That's right, yes.
And
We're going to do it together. Jason is a programmer. I'm not a programmer. I'm a technical analyst. He's not a technical analyst, but together, I hope we're going to have a very interesting and pertinent presentation for the actual subject, which is the transition from old school technical analysis to new modern digital technical analysis.
I was at the last meeting that we had with regard to the conference, and it looks like you've been given an extra 15 or so minutes because what you guys are doing is so important in terms of trying to get this across to people. Like you said, the move from old school to new school, even though a lot of our members have been doing new school for some time, it's something that we're actually broadening out in terms of the educational part of the STA.
Yeah, well, first of all, we're thrilled to have the extra quarter of an hour because we want to do as much as we can live and do live programming, Python programming and testing and development, just to show how it's done. And the idea is to show how relatively straightforward it is to do. But your other point you made just there, Jerry, about people have been doing this for a long time, that is absolutely true. The very first thing I did when I got my very first computer, which was an Apple II, was to test the moving average crossovers to see which combination worked best. And there was a big Merrill Lynch report, which is still quite a famous report, doing optimization, and it was a sort of how to optimize kind of report. And so that was back in the 80s that started with those simple things. And of course, since then, it's got more and more powerful, and the languages have got easier to use. When I started, you had to actually write code, and then now we have things like Easy Language, which is brilliant. That is ubiquitous, and MT4 and other languages like that, and now more powerful languages coming on stream as well, which are also accessible.
That's right, and a lot of the print trading programs and charting programs, like you said, it just made it very easy for you non-coders to be able to try to quantify their views and their thoughts and to backtest. Does this work? Does this not work? In which environment does it work? And there's lots of pitfalls and data management stuff that has to go in with it, which I think, given the range of the speakers that we have on offer, is going to be well covered.
Yes, indeed. And one of the things that, coming as a technical analyst and not a programmer to the world of programmers. And when I was at Bloomberg, I worked a lot with the programmers, developers, getting things onto Bloomberg, powerful things onto Bloomberg. And so I began to learn how to talk to programmers. And very, very often it's daunting to talk to them because they have their own world and their own language. But I've realized, for example, today, I realized that we talk. Jason was talking about feature engineering, and I said, "Well, what is it?" And apparently, really, just features are indicators. So, a moving average crossover and MACD is a feature. Feature engineering is putting them together. Well, we have a different name for that. but basically, I got maybe a little dictionary of translation. If you want to speak to a programmer, what he means by this is, or when you want him to do that, you say this, not what we're used to saying.
That's pretty much, it's all in there. Just has to be translated into the correct language.
Here's one for you, Jerry. What is strategy support vector classifier?
I have no idea, but it sounds like somebody's telling somebody about something.
Well, you're right, but you will. Let's say when you come to the talk, it's something you already know.
Okay.
It's just the way they say it. It sounds complicated when they say it.
I had the privilege of working with Quant Team at Bank of America back in the 90s. And I just remember, they were losing money every which way you could because it was choppy markets and they were making some money this and the other. But I remember giving him a technical book and he came back and said, "This bull flag. Now that's interesting." And I was thinking, But
In all seriousness, when I do courses now, quite often I have, let's say, in a group of institutional courses, and maybe a dozen people on the course, could be four of them are actually quants, which is sort of surprising that quants come to a course in technical analysis to learn the RSI and the stochastic and
yeah,
things like that. But and I asked them, why are you here? Really, you're great mathematicians, and it's really, when they're honest, what they tell me is that they have been taught that the markets were efficient and they don't have they're random in behavior, and they don't have trends and they don't have momentum. But now they're in the market, they see that this is very much true, and impossible things like crashes and bubbles occur, which are statistically impossible, but they happen quite frequently. Um, so that's, you guys seem to have known that for all the time. So that's why I'm here. And so, the maths is simple, but that we use, but actually going up is a simple thing to describe, and being more complicated about it doesn't make it better.
yes. I think sometimes technical analysts do themselves a disservice by reminding everybody just how
Mm,
simple our life is when we look at supply and demand and the
mm,
price that has to move to basically adjust the balance or imbalance between them. And
yes.
people look at us and go, well, come on, what do you really do? And you go, okay, I look at supply and demand and it comes through as the price. And we look at the price to see if there's a trend and or a reversal of the trend for the most
Yeah,
part. And we use a bunch of indicators to try to quantify our views
yeah,
as much as we can. Because,
yeah,
usually we're in a hurry and we need filters of some sort if we're going to be looking at more than just one or two markets.
yeah.
And
And
they look at you and go, so what do
simplicity
you
is,
really do? And you go,
yes, yeah. And simplicity is really a plus. It's not a minus. The fact that you can do it in a very complicated way, or you
yeah.
can do it simply. You should do it in a simple way, because the simple way will be clearer, easier to understand. You will understand what the machine is doing. Once it becomes complicated, you lose contact
Oh, God,
with
yes.
why are you buying and selling. It's taken over now, and I
It's
don't know why.
buried somewhere in the code. I have no idea what the computer is
Yes,
doing.
yeah, of course
I've
it
been in
doesn't.
that situation as
Yeah,
well.
yeah,
It's
yeah.
things to avoid. All
Mm.
right, Trevor. Well, I'm really looking forward to hearing you and Jason speak because I think it's going to be awesome in terms of, having real life production of what we are talking about. And that is
Yes,
something you're offering. And we have a
yeah,
lot of speakers giving different insights into the same problem from different angles, which I think is
yes,
going to be really insightful. So,
yeah.
Trevor, I'm looking forward to seeing you.
Yes, I'm looking forward to. I'm really looking forward to it. It's a wonderful thing that the STA has done by having this conference. I've got to say that it's really right on what's going on. What's hot. What people are doing in technical analysis these days, and it's brilliant. And I really look forward to it. And I hope it's the first of many.
Great. I'll see you then, Trevor.
Okay, thanks, Jerry. Bye bye.
See you. Bye.